What's happening, MJ traders and investors? It's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Today is Wednesday, May 21st. Hope you're well. And in this video, we've got an exciting update. We have a report from Deloitte that we're going to go over, highlighting excise tax and the MJ Council of Canada once again calling for change. We know multiple companies in Canada, licensed producers, have been requesting this as well. It's really been a topic of contention and a huge burden on the industry. One of the biggest issues at the moment, if not the biggest, and same thing in the US, 280E and this punitive tax code, which in my opinion, they could all go away roughly around the same time to maintain that level playing field. And coming from a firm like Deloitte, a huge professional services company, this says a lot. So I think this is definitely going to turn a lot of heads. And overall, you know, it's been lackluster. We know that Trudeau also said in 2023 it's time for the federal government to step up. But the more people, the more organizations, the more companies that talk about this and advocate for reform and for change, that's when we're going to make some waves in the industry. So before we get to it, make sure to smash the like. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So this was the article dated from today, May 21st. MJ Council of Canada welcomes the findings of Deloitte report and calls for change to the excise tax to strengthen Canada's legal MJ industry. So they kind of go over a few other things that they mentioned in a previous article, so I won't reiterate everything, but the MJ Council of Canada echoes the urgent need for excise tax reform as outlined in Deloitte's 2025 study on the impact of MJ excise tax. And here's the report here. If you just click on that, this is a clickable link right here, Deloitte's 2025 study, and it'll bring it up here. And then there's also a French option, so if you want to check that out, feel free to do so. We'll run through some of the important highlights here in just a moment. But the report confirms what Canada's MJ producers have long expressed. The current excise tax model is unsustainable and must be restructured to reflect the economic realities of the industry. And they're way higher than alcohol and tobacco. Canada likes to position itself as a global leader in legal MJ, but since legalization in 2018, the federal government has failed this industry and the tens of thousands of hardworking Canadians that it supports, said Paul McCarthy, president of the MJ Council of Canada. With a new government in office, it's time for a fresh approach. The MJ industry deserves the same attention and support as any sector of our economy. And there was also a report that 64% of Canadians believe that this is going to be an important pillar in the economy going forward. That is a huge number, and that we need to start support of growth in this industry and start supporting these companies. So, if you look at tax as well, with this new leadership and administration in Canada, anti-tax has been very, very popular. So lowering taxes, and this falls in line with that sort of mentality. So I'm hopeful, cautiously optimistic, but hopeful that we can get something across the finish line here with regards to excise tax. They've already been talking about going from the excise stamp, so going from 13 different ones for provinces and territories to one national stamp. That'll cut down on, just costs and then overall, burden, time. It's a lot of work for these companies. So Canada's MJ industry is a major driver of economic growth. Since legalization, has contributed over $43 billion to the national GDP, with approximately $7.4 billion contributed in 2024 alone. To keep that momentum going, key policy changes are needed to ensure the industry can grow, compete, and innovate. So the current excise tax framework is completely misaligned with today's market realities. When it was introduced in 2018, MJ sold for approximately $10 per gram. Today, producers are receiving as little as $3 per gram, yet the excise tax remains the greater of 10% of the product's value, or $1 per gram. This has created a crushing and unintended tax burden that's now 3 times higher than what was originally envisioned. Instead of thriving, licensed producers are being pushed to the brink. Many are unable to meet their tax obligations and are being forced out of the market, taking good jobs with them. If not fixed, Canada risks losing the very business it once championed through legalization. And the only thing that makes sense to me, and you can let me know in the comments section if you agree with me, disagree with me, but the only thing that makes sense to me is that the government is just weeding out all of the small players. And it looks to be the same in the US with this 280E and lack of reform in the US for so long. And in my opinion, it's to slow down the industry so that they can let big pharma, big alcohol, big tobacco, all of the major lobbyists, right, so that they can get caught up and not get disrupted. But also weed out, again, no pun intended, all of the small mom and pop operators, and make it look like, oh yeah, you were given a decade to thrive, right? And then, but we all know that the longer they drag out these burdens and high taxes, etc., both in Canada and the U.S. and anywhere in the world, it's only going to benefit the big corporations, which are just going to dilute market share and have tons of deep pockets. So it's the only thing that makes sense to me. I can't think of anything else. Why would they want to do that? Even the illicit market is still thriving, and it's very unhealthy for, it's not safe, it's not regulated. There's a lot of issues with pesticides and whatnot. So like that's the only thing that makes sense to me. The MJ Council of Canada calls on the government of Canada to eliminate the $1 per gram floor and instead apply a 10% ad valorem rate as proposed by the Standing Committee of Finance in 2024. The industry's challenge extend well beyond taxation, though. Since legalization, the previous government largely turned a blind eye to the persistent illicit MJ market, allowing criminal actors to thrive at the expense of licensed businesses. This undermines the foundation of legalization and the promise of a safe, regulated MJ industry. Illicit MJ is estimated to make up between 25% and 40% of total sales in Canada. So again, they're not looking after the health of Canadians. They're not looking after the health of the Canadian licensed producers. They're looking after the health of themselves, the government, because they get they're the biggest beneficiary of MJ legalization. Look at the amount of excise tax they're bringing in. And also, like I said, just trying to protect their government friends and the incumbents, the big pharmas, alcohols, tobaccos of the world. That's the only thing that makes sense. It's the only thing that can make sense. There's literally no other angle at this from my perspective. If anybody has any other reasons why they think that they might be stalling on this, please let me know. But I think those are the two big ones. But the strategy must include tackling illegal production, shuttering illegal storefronts and online sales, just common sense, which we know isn't so common these days, and interdicting shipments of illegal product and launching a public awareness and education campaign on the dangers of supporting the illicit market. Now, I haven't seen really anything about, the dangers of the illicit market. I see MJ commercials all the time here in Canada. Start low, go slow, that kind of thing. Don't do it if you're younger. But I never see anything about promoting the dangers of the illicit market. So we'll go through this really quickly here. And like I said, if you just click on this link, it'll bring up a page. If you scroll down, you'll have the option to read it in French as well, since Canada is a bilingual country. The impact of the MJ excise tax. So insights into Canada's MJ market. I won't go through the entire thing, but some quick highlights. We'll go through, this is just the main intro here. So they talk about policy and objectives for producers and also federal and provincial regulators. So consulting financial data of public MJ producers, including 36 licensed MJ producers LPs from 2019 to 2024, we found that excise taxes increased significantly as a share of total gross revenue. And in most cases, on average, it's about a third of their top line revenue is going to excise taxes alone. So this is ranging from an average of 11.2% in 2019 to 24.3% in 2024. On the basis purely of gross MJ production revenue subject to excise tax, this increased to 15.3% in 2019 to 31.5% in 2024. For perspective, the excise tax is often the largest single expense item for MJ producers, with excise tax representing an average of 45.9% of COGS, cost of goods sold, and 77.1% of SG&A, sales general and administrative, in fiscal year 2023. The MJ producers assessed. This is wild. So, they're just talking about how we can work together to get this changed. They talk about their methodology. So go through that. If we go through here to understanding the excise tax, it breaks it down per category. And if we scroll down a little bit, so look at all the other regulatory costs. They have the application fee, annual regulatory fee. They have the security clearance fee. And then in terms of tax, right, there's not just excise tax, there's payroll taxes and income taxes. Like this is a huge burden on the industry. So getting that reform and switching from a flat fee to a percentage fee, and then also one national stamp, I think is going to really help. If we go down here to other regulatory costs, It breaks down that into more detail. We have some commentary as well from different, what are MJ producers' views on excise tax. So you can see here, big one, you have Tilray. Price compression, historical price compression persists in the market, intensified by fierce competition among approximately 1,000 licensed producers in Canada. So again, that's not sustainable, right? We don't need 1,000 producers in Canada. We don't need 1,000 producers in the U.S., and the U.S. is much, much bigger than we are. But obviously that consolidation is going to continue in the space. And again, I think this is sort of the method to their madness, is to drown out all of those small companies and those small mom and pop shops and leave it to the big corporations. That's how every industry is run, and they need to protect the incumbents, right? The companies and the industries that are being disrupted the most are big pharma, alcohol, and tobacco. So in my opinion, it's all for them. Despite increased sales volume, year-over-year price compression has adversely impacted revenue by approximately $9.8 million for the year ended May 31st, 2024, influencing both MJ gross margin and the bottom line. The fixed impact of excise per gram, notwithstanding the decline in average selling prices, further compounds these challenges. Again, that was from Tilray. Organogram says, everybody said something has to be done on excise tax to get sustainable industry that would not only make sure that it met the health objective for safe product available, but keeping money out of the illicit market, which has been a failure so far. You've got some comments from Rubicon. You've got some comments from Canopy Growth. We were disappointed in the Canadian government missed the opportunity to address the flawed excise tax regime in April 16th federal budget. So we know that's been delayed this year as well. It's not going to be coming out. So, this is probably going to be a 2026 story, I would think, at the earliest. But if it happens sooner, I would gladly welcome it. SNDL says the MJ taxation system is in desperate need of reform and appropriate enforcement. One can't help but consider the financial benefits from the appropriate management of our sector could have on Canadian deficits, community support systems, and education, healthcare, and safety. You got some Aurora comments there as well, so you can check that out for more detail. But check this out. Here's the impact of Canadian excise tax and revenue. And you can see here, it breaks it down. 33.8% excise tax as a percentage of Canadian MJ production value. And you can see ever since they launched the 2.0 products, so it started off with flour and then the 2.0, your edibles and and all that good stuff. And you can see it's just been completely out of alignment here and out of reality. So if we scroll down, they break it down, excise tax, percentage of cost of goods sold. So you have some charts on that, and then SG&A, as I mentioned before. Impact of Canadian excise tax. So if excise tax were calculated on the basis of 10% of product sales, the number of LPs with positive reported net income and reported EBITDA increases from 14.3% to 28.6% and 28.6% to 55% respectively in fiscal year 2023. So you can see that would have a huge impact on the sector. And then they talk about solvency. Scroll down here. The excise tax comparison and conclusion. So there's an opportunity for both federal, provincial regulators and the producers in Canada to work collaboratively to address the current excise tax framework to ensure financial viability and diversity of MJ producers while meeting the health and social policy objectives of federal and provincial regulators. The MJ Act review has noted this issue and has emphasized the need for the review of the excise tax framework. However, it is clear that the timely change is needed. So we'll see what happens. Hopefully we can get something across the finish line. And like I said, the more talking heads and the more people, organizations, companies that we see, government officials talking about this, the better. And I highly encourage you to reach out to your representatives in your area and let them know that we want change. If we take a look at CGC here on the day today, it's currently leading and obviously seeing some very bullish momentum. We had an hourly bull flag as well from the low to the high there. You just take that measured move and go from the low to the high, move it out to your 0.382 fib, and it said our target was 194, 195, and we just hit that target. We hit 199. We zoom out here to the daily time frame. We had no resistance until about 197, and that's pretty much where we hit today. Next resistance level will be up at 290, but massive move here just at 77 cents, flirting with a second reverse split, and then after that 77 cents, now knocking on the door of $2, up about 160% just from April 9th. So love to see it. Starting to see some momentum come back to this sector. And in my opinion, most of it has to do with the fact that we're just seeing risk on appetite in the market return. You're starting to see the M2 money supply and global liquidity open up, and it's just showing that money is flowing into equities and risk on assets. And this is, in my opinion, just the beginning. I think we're going to see a continued market push higher over the coming months. But we're not set up well at all in the MJ space if the S&P 500 were to see any meaningful pullback, and that's why I'm very relieved to see that some of these prices are starting to bounce. But the whole sector, I think there's going to be some leaders and laggards, and some will take a breather and the other ones will start to catch up. But the more bounce that we can see across the sector, the better we're going to cushion ourselves if the S&P 500 were to see any meaningful pullback. But again, I think big tech, crypto, AI topping out over the next few months should bode well for the MJ industry. I think they're going to be a huge beneficiary of that, and seeing that money rotate into the beaten down MJ sector, which has tons of catalysts ahead and just hasn't participated in this everything bubble that we're in today. All right, let me know your thoughts and opinions on this in the comment section below. We'll continue the conversation there. It's Rod with Pow Group. Once again, thanks for joining us on the Pursuit of Wealth, and we'll catch you on the next video.